Did you know that in Spain you might be paying more taxes than you should simply because you don't understand how deductions work? Every year, thousands of people, employees, freelancers and investors overpay taxes, not because they are doing anything illegal, not because they feel their tax return incorrectly, but because they don't really understand how the tax system works. And there is one key idea you need to understand from the beginning. In Spain, you don't pay taxes on everything you earn. You pay taxes on what remains after deductions and reductions. My name is Ainhoa, a tax expert at Balcells Group, and in this video we will explain in a clear and practical way how deductions work in Spain and how they can completely change what you pay in taxes. If you are working, self-employed or investing, stay until the end, because there are probably things you can optimize that you don't even know about. What are deductions? Before we go into specific cases, we need to understand the basics. When you file your tax return in Spain, the tax is not calculated directly on all your income. First, an adjustment is made. Certain expenses are subtracted from your income and some reductions are applied. Only after this process is the tax calculated. This final result is called the taxable base. And here is the key point. The lower your tax base is, the less tax you pay. That's why deduction exists. They are legal mechanisms that allow you to adjust that base so it better reflects your real situation. But not everything can be deducted. You cannot deduct any expense just because you had it. The tax authorities require that the expense is related to your activity or situation, is properly justified, or meets specific legal requirements. And this is where mistakes usually begin. 1. If you are an employee. If you are an employee, the ability to deduct expenses is quite limited. This makes sense because your income does not directly depend on your expenses. You work for a company. However, there are still elements that reduce your tax burden even if many people don't notice them. For example, social security contributions that are already deducted from your salary are not just cost. They also reduce the base on which you are taxed. The same applies to certain professional fees or even legal expenses related to labor disputes within specific limits. But where you really see the impact is in automatic reductions within the system, especially for lower income levels. There are mechanisms that reduce your taxable base and sometimes even reduce the final tax directly. The problem is that many people don't understand how this works, so they don't realize the real impact. 2. If you are self-employed, freelancer, everything changes. Here the system works differently. The tax authorities start from a different idea. If you are self-employed, you need to spend money to generate income. That's why you are allowed to deduct many more expenses. But system is also much stricter. It's not about whether the expense seems reasonable to you. It's about whether you can prove that it's directly related to your activity, that you have a valid invoice that is properly recorded. When these conditions are met, the range of deductible expenses is wide. This can include rent for your workspace, tools and equipment, software, professional services, training related to your activity. There are also more complex situations like working from home, where part of your utilities can be deducted proportionally, although with limitations. This is where one of the biggest problems appears. Many freelancers fall into two extremes. Either they don't deduct anything out of fear, or they deduct too much without meeting the requirements. And both situations can be harmful. If you've made it this far, it means that this video is helping you. In the description, we will find a 10% discount coupon for your next consultation with our lawyers. 3. If you invest, it's all about how you calculate the gain. When it comes to investments, the logic changes again. Here, we don't talk about income, but about capital gains. This means the profit you make when you sell an asset, stocks, cryptocurrencies, or property. And the key idea is this: you don't pay taxes on the total amount you receive. You pay taxes on the real profit. This profit is calculated by subtracting the purchase price minus all related costs from the selling price. These costs can include commissions, legal fees, or even improvements in the case of real estate. These gains are taxed under a different system called the savings base, with progressive tax rates that can go up to around 30% in higher brackets. But there is one key element many people don't use correctly: loss offsetting. If you have losses from an investment, you can use them to reduce the tax impact on other gains and even carry them forward for several years. Not using this properly can mean paying taxes you could have avoided. If you want to make sure you are optimizing your tax situation in Spain correctly, the most important thing is to analyze your case in a personalized way. At Balcells Group, we help you understand exactly what you can deduct and how to legally reduce your tax burden. Send us an email to info@balcellsgroup.com and subscribe for more clear content about taxes and taxation in Spain. See you in the next video.